Hello everyone. We will begin this presentation with introductions from Dean Stiles, Global Head of Go-to-Market for SAP Commodity Management Solutions, and Sam Stuckey from Deloitte and SAP.
Thanks, Ray, and thanks everybody for joining today. First of all, I want to start by saying hopefully your family is safe and healthy over these unprecedented times. I've been at SAP for about 4 years. Prior to that, I spent about 15 years in commodity management systems. My role with SAP is really to evangelize and bring our message to the market in terms of what SAP has been doing over the last several years in commodity management and essentially get conversations started. So that's hopefully what we accomplished today.
Hello, everyone. I'm Sam Stuckey. I'm a senior manager at Deloitte and SAP and have really spent my career in and around the commodities business, working primarily with large kind of physical asset-backed commodities companies. And I specialize in what we call commodities trading transformation, which is all about understanding and helping clients make changes across their operating models, organizations, processes, and last but certainly not least, technology associated with their commodities trading and commodities management businesses. Really spent the last several years focusing on SAP, and happy to talk about the solution today.
Okay, great, Sam. So our focus today is really to give the audience a background as to what we've been up to over the last 8 years or so. Really talk about the daily life of how commodities impact you. And I know there's some diversity on the call today, but everybody uses and absorbs commodities differently. So I'm going to talk about that in the SAP footprint there. Sam's going to talk about how the SAP solution and an integrated solution to your ERP is essentially your best practices. And he's going to talk a lot about the importance of harvesting the data that all that produces. We're going to close by maybe talking about some key business requirements to look out for. As I said before, these webcasts are really designed to start a conversation, and hopefully at the end of this, you reach out to your SAP AE or your digital supply chain AE and set up discovery sessions or follow-up discussions to take this to the next level. So I wanted to talk about how or why we got into this business in the first place. And first I want to talk about volatility. Volatility is driven by several factors, not to be too obvious, but you just need to look out your window today and see how quickly markets can change. Our friends in the oil patch are going through unprecedented chaos. The folks in the protein space are dealing with severe disruption in their supply chains. And this is all on top of what is typically part of what we call volatility. So we're dealing with technology-driven customer demand. We're dealing with a tighter management of inventories and supply, geopolitical factors, speculators. This is what all impacts pricing through volatility. Secondly, when it comes to risk, our customers are more and more required to respond to demand from their top executives when it comes to where they're positively or negatively exposed. Essentially, what risk management should do is minimize or eliminate surprises and to avoid especially reliance on short-term financial tools that can get very expensive. And finally, regulation. Regulation itself is very volatile. There's a greater demand for transparency and real-time auditing throughout the enterprise. So having a single version of the truth has never been more important. And governments and regulatory bodies, as you see there's a list there that they're asking for more and more detail around accounting and hedging and taxes, environmental practices, what have you. So digging a little bit more into volatility, the bottom line is volatility does create uncertainty around your costs. You see in this chart here, I really do like this chart, but you can see that customers typically do a very good job of managing the volatility in the gray areas here. This is interest rates and FX, everything you'd see in a treasury system. But really, depending on what commodities you depend on, the raw materials is really where all the chaos is. If it's oil or liquids or agricultural products, base metals, precious metals, what have you, this is really where the chaos can appear. And so SAP really wanted to focus on how we can help our customers manage this better. So we first approached this with really 3 core tenets. First of all, we wanted to leverage the decades of experience that SAP has in the various industries around finance and logistics. Second of all, SAP made a strategic investment in specific resources like business analysts, project managers, customer-facing folks like myself, solution managers, all with deep experience around commodities. finally, we wanted to, everything that you'll see in these solutions if and when we ever get to a demonstration with your particular organization, everything you see in those solutions was developed with at least one strategic customer in mind, or even a strategic partner. Nothing was built in a vacuum. This slide here talks about the evolution, how we got to where we are today, and I'll start with the far left there. We see this still everywhere, and this is a very common systemic way in which our customers are managing commodities today, and that's where they have a specialty third-party application where deal capture, risk management, logistics are all managed in a commodity trading and risk management solution. And then there's a light interface, perhaps on the financing side into SAP. So what this creates is really a lack of transparency, and certainly a lack of ability to leverage the significant investment that SAP is making in technology. I'm going to dig into that a little more on the next slide. The middle column here is where we've seen some customers walk down the path of a deeper integration to SAP. So essentially the deal capture and risk still are in that specialty solution, but the SAP ERP is where the logistics happen. SAP have some experience here. In fact, we partnered with a specialty vendor back in the mid-2000s to bring to market a separate product that had this deeply integrated solution, and despite best intentions on both sides, the project ultimately failed because the complexities around how commodities behave and the integration requirements were significant, and we just couldn't get to that point where it was real-time data, avoiding performance issues and all that good stuff. So that really drove us to where we are on the far right, which is really the unified platform. A single instance, single version of the truth, all future-proofed on the technology side because SAP owns all the technology. And this is what SAP Commodity Management really is. So digging into that last column, I talked about the typical deployment of commodity management. This is I'm not going to go over this in a whole lot of detail, but it's complicated just because this is exactly what our customers deal with, right? So this is a day in the life of a commodities contract from deal capture through to settlement. And the blue boxes indicate the integration requirements, usually a bilateral interface to the ERP in order to get customers to have everybody seeing the same data at the same time. Quite often we see multiple CTRM databases on the back end. And what this creates is really this multiple versions of the truth, and it creates this challenge between estimates and actuals. So that creates significant challenges, as you see there, with stagnant data, compliance issues, price uncertainty at settlement. This can impact margins, and it can impact profits. For those in the agricultural space, there's the additional challenge around origination, which is what we see out there. Status quo is to manage that separately and outside the system. SAP has a solution for that as well as part of our commodity suite called ACM, or Agricultural Contract Management. So some of you on the phone today might have already seen the presentation that we give around our intelligent enterprise, where we have a suite of business solutions delivered to the market on top of our digital platform, all leveraging intelligent technologies in the middle, like machine learning, IoT, blockchain, analytics. So how can we leverage that to deal with that mess you saw in that previous slide? So this is essentially where we are today, where all these critical steps along the way are dealt on a single unified platform. The data does not move. Throughout the enterprise, everybody is working off of the same data tables. What you see in the front office is exactly what they're going to see in the back office. Each step affects the next. And we eliminate the challenge around estimates versus actuals, which is a significant move forward. This is our consumer products value chain at SAP, and I wanted to talk a little bit about this only because it's important to know where commodity management plays. You've been dealing with SAP for many years, and you know that we have solutions that bring ideas to bear. They work with collaboration. We have solutions that deal with sourcing and procurement, the manufacturing process, the building of these products, right through to your entire digital supply chain. And then we got distribution and retail on the far right. So really where we play is in this space, really around sourcing and procurement for CPG companies and any issues that happen downstream of that. In terms of industry usage, we really have four typical customer profiles that we talk to. Commodity producers are the folks that are taking the product out of the ground, like oil companies bringing oil out of the ground, or mining, or agricultural companies growing and harvesting. Secondly, we have the commodity traders group. These are the folks that really make their money on the trading and movement of these commodities. That market itself has been refined over the last several years due to regulatory issues, but we do see that functionality in large organizations where specific desks and specialties are managed through traders that who handle that function. Commodity converters are really those buying a significant amount of raw materials and using that to turn into another core offering and taking that to market. And then consumers of commodities. These are folks that spend a large amount of money on direct spend for commodities for their own use. Think about transport companies for fuel, airlines for jet fuel, construction companies for lumber, you get the idea, aluminum for packaging. We classify commodities into these categories. This isn't an exhaustive list, but at SAP we group these commodities this way just because they behave in a similar fashion. Those in the CPG world, obviously grains and soft commodities would be of interest to you, but also we're seeing more and more expansion of thinking there, where we deal with the packaging side of the business, so metals come into play. We talk about additives, which brings chemicals into play. So this is really the target that we're after. When it comes to end-to-end commodity management, this is a typical life cycle of a contract. Everything that commodity management does is leveraged off of SAP Core. So we take what we have done excellently on the finance side for forecasting and policy, right through to managing orders, call-offs, the specific pricing. The logistics is leveraged out of Core, and the invoicing right through to risk management, right through to the green boxes there on the right. This is really the utopia of what a commodity management process should be. I'm going to dig into a little bit more about the blue boxes and the orange boxes, but I wanted to start with the high level first. So when it comes to those blue boxes, when it comes to deal capture, we support all the nuances around various commodities. So this includes quality metrics, includes pricing formulas, flexibility around terms and conditions. We support call-offs, spot buys. We capture key elements like delivery days and any price fixation that's tied to that. For logistics, again, leveraging the core, we leverage that core, but we also have the nuances around every specific commodity that is required built on top of that. The quality metrics, as you see there, again, typically that's managed out of core, but we have customized it for each commodity. So think about items like moisture, shrinkage, sulfur content, all of which can impact the final settlement price. And then finally, on the settlement side, the commodity-specific requirements are there, including provisional differential invoicing, determined by market prices and quality assessments. So throughout this process, we have the ability to do contract revaluation. So every time the market moves, we have the ability to have that immediately impact the contracts in the system. And then that is, at the end of the day, is sent over to those tables are then fed off of our risk management module. So in terms of risk management, you see the list of financial derivatives we typically see there. This is for customers that are doing hedging on their physical positions. So any company that's hedging their physical contracts will manage their exposures here, including the ability to dig into P&L and mark to market and look at any point in history compared to today. How did those, or where was the delta there? We have a new partner that we brought on board that allows you to do advanced analytics, such as value at risk calculations, which we're happy to talk to you about. Back office administration includes the approvals, confirmations, margin management, and settlement. Once again, as the market data is updated in the system, these risk reports are updated in real time. I did want to talk specifically about the commodity pricing engine. This is really the straw that stirs the drink for us. And the way we ask our customers to look at the commodity pricing engine is really to think about anything that you would typically build in a formulaic basket that you would typically do in spreadsheets off the system. You can now do directly into SAP itself. So you see there's some examples that are possible, all different kinds of rules, surcharges, discounts, quality-driven adjustments, treatment charges, any formula portions or formulaic basket of indices. We fully support that. How you get the pricing into the system is also, you have options there. We have customers that do it manually on a spot basis. We have customers feeding their price curves right off of a spreadsheet, but we also have automatic interfacing with various market providers like Reuters, Bloomberg, and others, and bring those prices in on a regular basis, fully automated. We're not going to get too much into IT today, but I did want to bring up this slide for those that are familiar with the SAP stack. I wanted to show, just to back up the fact that this really is a native organic development on top of SAP Core. So essentially, when you look at our commodity risk engine, for instance, that's an enhancement to our treasury and risk management module. The logistics are feeding off of the data objects in manufacturing, transportation, warehousing, and quality. We work off of MM contracts, SD contracts for sales and procurement, but we also work off of GTM if that is if those contracts are important to you. I do want to stress though that the stack that you see here does not need to be fully licensed, and you don't have to be fully using those modules. Once the core is installed, the data objects are made available to commodity management, and we can function for everything that I've described. Right in the middle there, you see the CPE. That's the commodity pricing engine. Again, that's core to how you end up pricing your contracts and settling accurately. Our solution can be deployed in a number of ways. It can be deployed on-premise. It can be deployed on the cloud through our extended edition, formerly known as STE. And we also have our HANA Enterprise Cloud version as well. But I also wanted to bring to bear an option that might be of interest to some folks on the call when it comes to deploying an S4 sidecar. So this comes into play when perhaps you have a long-term view for S4, or you are perhaps a net new customer that is not yet fully on SAP. The S4 sidecar allows you to deploy the commodity management solution in that sidecar, do interfacing back to ECC or whatever ERP system you're currently using. And what we found is that S4 that sidecar almost acts like a pull mechanism for the rest of the organization. Do a really like a light deployment of S4 specifically for that purpose. Get your feet wet on the S4 side, and then eventually maybe use that as a test case for larger adoption of S4. So that is that's how it's deployed, and we'll go in much more detail with you when we sit down and talk to you one-on-one. Sam, I think this is where we switch to yourself. So I'm going to operate the slides, and Sam, you just give me the ping when you're ready to switch.
Perfect. Thank you, Dean. Okay, so Dean just walked us through the commodity management solution. From a kind of a more technical and solution-specific standpoint, I want to spend some time today talking about the industry and the context in which we're all operating in the commodities business. As Dean mentioned, commodity volatility is ever present, and the recent events of the last couple of months have really just underscored how quickly things can change in the business. And that volatility presents both risks and opportunities and opportunities specifically for those organizations that are best equipped to take advantage of it. And as the market evolves, those companies that are best equipped to take advantage of it are those companies that are able to integrate their trading operations with their core business operations. And when I talk today, I'm going to use the word trading, but what I mean by that is not the traditional kind of, you think of people in the NYMEX pits trading, but really I'm talking about anyone in your organization that has to deal with commodity market exposures and either procure or sell commodities, whether that's on the procurement or sell side, or it is kind of true market making and trading activities. But it's a really critical element of leading organizations is the ability to bring that trading function into the core operations of the business in order to be able to capture the upside of that volatility. Now, we pair that volatility with the digital revolution that we're currently undergoing, which is providing unprecedented visibility into and transparency of the commodity value chain within organizations, providing tremendous opportunities for data analytics and insight. However, the flip side of that digital revolution is that it's producing tremendous amounts of data that need to be reviewed, prioritized, and coalesced into meaningful information that the business can act upon. And so, in all this context setting, what does this lead me to? And what it leads me to is that the market, particularly going forward, is going to require a fully integrated, powerful, and scalable commodity trading and risk management solution, like SAP is offering and we're talking about today. So let's move on to the next slide, Dean, and maybe I chat a bit about what it means to have an integrated trading organization. So, as I mentioned, SAP Commodity Management isn't about just replacing a CTRM system that may exist today. It's about embedding the trading capability within the enterprise. Until recently, as Dean mentioned the history of this at SAP, until recently, there hasn't been an opportunity to really bring together the trading technology function with the rest of the ERP. And so there's been an unnatural split across the organization where there's these really critical commodity management activities that are happening outside of your core enterprise system, and almost necessarily because of that, outside of the core enterprise itself and the way it operates. But what we see a tremendous advantage for organizations that are able to do it is to bring that trading business back into the fold of the enterprise and start to connect with the types of organizations you see on this slide. So if I look at IT, how do we take the proliferation of digital capabilities that are happening across the industry and push them into the trade floor? Also, likewise, how do we take the adoption of digital trading activities and push that into the best hands of IT and help them to manage it and use it on a more scalable platform? Talking about finance and accounting, one of the biggest challenges we hear, and I've been in this business for over 15 years, the one that we hear the most is, how do I understand my trading results as they relate to my financial results? How do I bring together my trading performance with my financial performance and understand that reconciliation between financial and trading results? As Dean mentioned, the data is shared, the data is common in SAP Commodity Management. And so really it's a matter of having different groups looking at the same data for their own uses, which tremendously reduces trade book to financial reconciliation requirements. The next is human resources. And a lot of people ask, why do I have human resources on this slide? So another really common, a really common challenge we hear is, I know my traders, and again, I'm using traders in the most general sense here, but I know my traders are making money, but how much money should they have made? Or how do I measure the performance of my traders? Performance measurement within commercial and trading operations is a critical pain point for a lot of organizations. How do you know how they're performing relative to the information and assets that they're given as a part of their book, and versus other benchmarks within your organization? So the link to human resources in trading is actually a pretty critical one for understanding the accretive nature of the trading activities to your business. The the link between trading and treasury is quite natural. Treasury typically manages balance sheet commodities exposures as well as FX, but an active trading organization has the ability to very quickly generate commodities and FX exposures. And so being able to have your treasury function and your commodities function in a single platform reduces all that downtime of sending information across systems, having to translate that information into what's meaningful for their organizations. It's all right there. And treasury and trading kind of become tightly coupled so that they can each manage their respective exposures effectively, but also share that data and market information that's common between them. Asset management is an interesting one because a lot of, again, getting back to what we hear from our market participants, being able to integrate trading and a market point of view and trading positions into how you manage your assets and how you manage your supply chain is a really critical capability and a differentiating capability, because it's a challenge, particularly if you're in multiple systems, to bring all that data together so that you can make decisions. So the ability to integrate trading and trading positions, as well as that market point of view with how you manage your assets, is a true differentiator. And finally, procurement. The procurement function is often tightly coupled with the trading and supply function for the commodities business. There are opportunities to embed and do different types of procurement if you have a clear grasp of your trading market exposures and your commodity market exposures. Likewise, I say procurement, but on the other side, on the marketing side, it's a similar situation. When you understand your commodity market exposures, when you're in a position to be able to manage them, then you can change the conversation in the way you market your products and the way you price your products. So this all coming down to the bringing together of commodity trading solution with an enterprise resource planning solution like SAP on one platform really provides, frankly, an unprecedented opportunity to connect trading with the enterprise and unlock those benefits. And so as I move on to the next slide, I want to keep in mind, right, it's not about replacing a CTRM. It's really about bringing those things together and unlocking exponential insights through data and analytics. And at Deloitte, we think about this in two ways primarily. One, it's about bringing the trading and market data and that market point of view into the enterprise. And what that lets you do is it lets you highlight the impact of commodities market exposures on your financial results in near real time. So another challenge we also often run into is surprises from the trading results and the market impact on financial results from derivatives transactions. And so quickly understanding on a near real-time basis, what are my positions, what's their current mark-to-market, and what potential impact does that have on my financial statements that I have to post at the end of the month, is a really critical capability and a differentiator that a lot of organizations don't have. Likewise, we see people and a lot of interest in the ability to bring together market trading and asset data, like I talked about, for on-demand commodity value chain optimization. The markets are always moving, and a lot of organizations only do planning on a quarterly or monthly basis. But again, look at this past month. The markets changed so quickly that having all of this information in one system provides the capability to do more on-demand planning and incorporate the latest market constraints and market pricing into your planning activities. And again, provides real competitive differentiation if you can take advantage of that volatility. And then finally, integrate results of trading and your trading forecast into your C-suite reporting. So often in a lot of organizations, the trading results don't mesh well with the executive reporting packs, and it's tough to get clear, explainable trading results into the hands of your senior executives. And so again, going back to Dean's point around common data, common usage, SAP normalizes that information and allows you to integrate more readily the trading activity and the trading results into the hands of your executives, which allows them to make decisions and act more nimbly in the face of commodity volatility. So the other way we think about it, I've talked about bringing trading and market data into the enterprise, but there's also a benefit for the trading organization as well by introducing your proprietary enterprise data into their trading information portfolio. So understanding your assets and how your assets are performing and your planned asset downtimes and uptimes is useful asset operation information that allows them to predict market constraints proactively and to get ahead of those market constraints by either building inventory or drawing down inventory according with how the assets in a particular geography are going to perform. Likewise, the ability to update positions with near real-time operations forecasts, again, going back to that integration of assets and supply chain with trading. So really understanding what does your production look like? What do your consumption forecasts look like? If someone in, for example, asset management decides to ramp down an asset because they're not seeing enough demand to produce that product, instantly providing that to the trading organization to say, stop procuring for this asset because we're not going to be needing those commodities heading into the next 3 months, for example. It's a really big differentiator because, another common challenge we see is a mismatch between the trading and supply function and the commodities that they're procuring for use with the planning of the manufacturing. And that mismatch is costly, especially, again, given, take, for example, the oil markets, what we saw last week or 2 weeks ago. If you were building up a lot of inventory because you thought it was going to be used for something, it turns out it wasn't going to be used, and now you're sitting on quickly devalued inventory that who knows when the price is going to come back. So creating that linkage and keeping that tightly coupled is again, a competitive differentiator. And then finally, the ability to integrate credit and cash into deal analysis. And this is kind of from a couple of fronts. Obviously, we're in a time of stretched liquidity. And so really understanding where you stand with your counterparty credit exposure is critical because you don't want to overextend, particularly given their liquidity may be drying up. Likewise, trading operations, and particularly if you use exchange-traded instruments, can be very large cash consumers, so to speak, and tie up a lot of working capital. And so understanding before you make a large transaction in the commodities markets, what the cash requirements are going to be to support that trade or that position over its lifetime. And so the ability to understand and bring all that together, right, is just, again, getting the whole picture, which before we haven't been able to do, but is really being brought to the forefront. And the next generation of successful companies are going to be those that can take advantage of that volatility by bringing all this together, right? Bringing the trading and data information into the enterprise and bringing that enterprise data and your proprietary data to the hands of your commodities traders. So with that, I'll hand it back to you, Dean, to bring us home. Okay.
Thank you, Sam. Just a short blurb here on the relationship between SAP and Deloitte. We have partners that specialize in commodity management, just as we do throughout our entire offering. But I will say that over the last year or so, Deloitte and SAP have really collaborated significantly on commodity management. Deloitte's made a significant investment in their practice for SAP and commodity management. And we found that that the relationship has been valuable not only to the two of us, but also very valuable to our customers. So I'm happy to have Sam on the call today and working with us here.
Absolutely. Happy to be here.
I thought it was important to perhaps talk about our customer base because when we launched this in around the 2011 timeframe, we really were starting from ground zero, and there were several specialty vendors. That's the world that I came from. That were managing commodities, and SAP was certainly outside that realm. But over the last several years, we've grown to a licensed customer base of over 250, and you see how they're broken down there by industry. But particularly, I find this to be a remarkable thing that we've grown into the market leader for commodity management in terms of new customer growth. Given that the head start other vendors had and the relatively late entry into the space in 2011 for us, the growth has been meteoric, and it's quite a success story for us across the globe. We're going to start to close it off here, but I thought it'd be important to talk about some high-level business requirements to look for, no matter what industry you're in. We're talking about CPG companies more specifically today, but really our solution translates into multiple industries, including manufacturing, agriculture, the oil and liquids hydrocarbons business, metals, chemicals, high-tech, transportation. So for CPG companies, I mentioned before, sugar, cocoa, wheat. When you're doing if you're in the snack business, that's something you would be focused on. The barley, wheat for breweries, that kind of thing. Packaging, as I said before, opens the door to other direct spend that you might not think of as a commodity management play, but it certainly is. But what we tell our customers is, if you do have complex pricing formulas for your contracts for this type of spend that's typically managed off-system in spreadsheets, this is something we should talk to you about. If you have roles in the organization whose focus is to hedge your financial position using financial derivatives like swaps, futures, options, and forwards, this is also a flag for us that if you're doing that outside the system of SAP, you really should be talking to us about how to bring that into your ERP system. If you consider, if you do have price volatility throughout your supply chain, you're going to have lack of transparency in your contracts if it's not all integrated or in our case, natively built on top of SAP itself. If you're facing uncertainty at settlement, or you're facing significant issues around invoicing being incorrect and creating cash flow issues, again, that's another flag that we look for that we can dramatically improve on. These market swings, as we've talked about very recently, these market swings impact profit margin. They can impact share price. Many of the customers we talk to have a statement around commodities in their 10K every year. So these are all business requirements that you should keep your eye on. And if it is a challenge, and if it is something that is of interest to you, you should definitely reach out to us. So I'm going to wrap up now. In terms of the benefits, this has all been talked about at length, but I do want to kind of drive this point home that there's business benefits here and IT benefits. But we talked about the greater transparency into your contracts, which will have a positive impact on supply chain planning. So better planning leads to higher supply quality and more precise pricing. A unified platform gives you increased visibility on the risk side of the equation. And this is all going to optimize your decision-making capabilities. It cleans up your invoicing process, which will improve cash flow and keep you in compliance. On the IT side, there's one master set of data here. So this simplifies your architecture and the roles that you have to support this architecture dramatically. You've got a single user experience throughout the organization. This has dramatic impact on training and rolling out and supporting these solutions for L1 and L2 issues. When it comes to workflow and security, which is critical now more than ever, we leverage all that from SAP Core in our commodity solutions, so that simplifies it dramatically. We take everything that's happening in the core and apply it to commodity management. And finally, on the far end there, when it comes to auditing, we know that can be a big pain in the neck, especially when the audit is not expected. But having one unified platform with all historical references captured into one single source of the truth, the auditing process is dramatically simplified and the accuracy is much improved. That is really the end of the slide presentation. So I do want to thank you for making the time today to learn a bit about commodity management. I also want to thank you for forcing me into bringing in some gym equipment into my home office to make it look like I'm on top of that. And I did shower today. I had a haircut from my daughter, and she had a lot of fun doing that. So there's a lot of positives for me too for hosting this webcast. But by all means, to wrap up, definitely reach out to your AE or your digital supply chain rep, and let's set up a discovery session for your particular situation. And let's see if there's a fit there for us. That's ultimately all we want to accomplish today. If we can accomplish that, then I think we've done well today.